Hi there, welcome to Grain TV. It's Monday, July 25th, and another punishing day in soybeans. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn finished the day unchanged after being weaker for much of the day. Beans was off 22, both on old crop and new crop deliveries, and wheat managing to eke out a 2-cent advance. News today was pretty limited. We continue to watch the weather, although the impact of it is starting to fade as we get later in the season. But overall, the weather looks to be cooler this week compared to the weekend's hot conditions that were prevalent over much of the Midwest. So looking ahead for the rest of this week, much of the weather looks to be pretty benign. We also see pretty good chances of rainfall. Now, after this week, getting into the 1st of August, the models do suggest a hotter temperature forecast coming down the pipe. But overall, we continue to be trading very good conditions, both in corn and beans. Later today, we'll have the USDA crop progress report. Most expectations are for those crop progress ratings to be unchanged or only slightly lower than the previous week. So overall, the market continues to expect a very, very good yielding year for corn and beans. Let's take a look at weekly export inspections. This was the only really significant news out today, but overall there wasn't much to get excited about here. Corn did come in at the high end of expectations at 1.3 million metric tons versus 1 to 1.4 that was expected. Beans did exceed expectations with 700,000 metric tons versus 350 to 550 expected, and wheat coming in a respectable 549 versus 400 to 600 expected. In the case of wheat, the one thing that has been giving some short traders a pause and getting them out of the market has been the conditions in Europe. We're seeing the potential for France in particular to have a short crop compared to last year's record 41 million metric tons. Analysts in that part of the world suggest that the crop could be as low as 30 million metric tons. So that has been helping to sort of reverse the course here in the wheat market that's just been on this downward trajectory for quite some time. If we look technically at this chart, we can see what seems to be almost a double bottom formation around the lows at $4 back in the early part of July, or actually the late part of June, and then most recently here about a week or so ago before bouncing higher. So if we think this is going to be a double bottom and we have this formation around 432, then potentially the upside would give us a target in that 465 mark, 464 mark. That would be sort of around where the latest congestion was in trading before we got this steep slide. So fundamentally, there's not much to get excited about here in the wheat market, but if the weather conditions and the crop conditions in Europe are supportive for a rally and we get some short covering here, then I wouldn't be surprised to see this wheat market start to pop up a little bit after the punishing blow it's taken in the last 2 months. That's all we've got today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com and take a free trial of our trading platform and marketing services. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.